The cryptocurrency market's massive crash worsened Sunday as a wave of crackdown measures in China continues to rattle investor sentiment, pushing losses to more than $1.3 trillion since a market peak on May 12, the day billionaire Elon Musk announced on Twitter that Tesla would no longer invest in or sell Bitcoin due to its hefty environmental cost. In response to the recent warnings from Chinese regulators, cryptocurrency exchange Huobi told CoinDesk Sunday that it has halted its miner hosting services in mainland China. It's unclear how much that could impact mining, but crypto markets briefly crashed in April after blackouts in the nation led to massive declines in Bitcoin's mining rates. The company, which is one of the world's largest crypto exchanges by volume, also said it would stop providing certain investment products to new users in a slew of other countries, due to recent dynamic changes in the market, and, in order to protect the interests of investors. Crypto has been a casualty of the changing tide in and out of speculation. High-flying assets have increasingly fallen out of favor with inflation worries, and they're starting to weigh on the market, Lule Demisi, the president of Ally Invest, said in a weekend note. Sure, Elon Musk's tweets on Bitcoin added fuel to the fire, but Bitcoin has looked like the classic case of a crowded trade that turned. This week, crypto holders rushed to the exits. Despite the crash, ARK Investment CEO Cathie Wood says she still believes Bitcoin prices will rise to $500,000, a staggering 15 times current prices of $33,350, insisting that volatility in the crypto market is to be expected. We go through soul-searching times like this and scrape the models, and yes, our conviction is just as high, she told Bloomberg TV Wednesday, before warning, you never know how low is low when a market gets very emotional. Regulatory concerns have rocked the nascent crypto market before. Despite rising more than tenfold in 2017, the combined value of the world's cryptocurrencies crashed more than 80% within months after countries like South Korea started cracking down on then booming initial coin offerings, which minted new tokens and fueled an investor mania not unlike the recent surge in relatively unknown altcoins. It wasn't until the pandemic that inflationary concerns and heightened institutional adoption lifted the market to new highs again late last year. The market is still up about 50% from its early 2018 peak, but what's to come is still very uncertain. Some experts believe the market's matured enough to recoup its losses, but others are warning that there's still room for a steeper correction. Amid sell-off and extreme volatility, investors should be wary about cryptocurrencies, UBS warns. Forbes, crypto crash. Why some experts think the current pullback marks a healthy correction. Forbes, Bitcoin has crashed.